Hello, the beautiful traders. Welcome back to my channel. My name is Desmond Samuel, and I am back with yet another banger with that episode of our weekly outlook. Now, if you're new to my channel, this is the segment of my YouTube channel that I've actually dedicated to coming on here every single weekend to tell you guys and show you guys what I'm looking at for the weeks ahead, and then also show you guys how to navigate the financial market. So sit right and make sure you watch through all the way to the end because I like to leave the best for the end. Now, if you're new to my channel, kindly click on the subscribe button because if you're coming across this video or this channel, I'm assuming that you want to make money this year 2024. So do yourself a favor and make sure that you click on the subscribe button, then turn on the post notification, and then also watch and leave a comment. All right. So without wasting any much time, the first pair on my list is a euro dollar. So from from our past episodes, I've been highlighting the euro dollar to the downside. Sorry guys, I started calling the EU from the tops here, and then I was kind of like giving you guys week in week out updates on how the market was actually faring. But let's just look at things from a grand standpoint. So we first of all need to go to the monthly time frame to identify what the market is actually doing at the meantime. And if you look closely here, this market is actually in a bearish trend because we'll be making series of lower lows and lower highs. All right, so this is a high and low, high, low, high. So series of lower lows and lower highs, and we've come to a point where we've actually been stuck in a range for over a year now. All right, so this range has been lasting, and it's been since December, since December 2022 actually. So over a year already. So now this was the chart pattern that gave birth to this entire drop here. This was also an impulsive move on a higher time frame, like the monthly time frame, and obviously the weekly time frame as well. So if you bring your Fibonacci like so, okay, you can see that the market is still playing around the 0.5 region. Right, it tapped into the 0.618 region, and then it rejected all the way down to the blue bar here towards the 1.06003. And now we are currently still playing around, and I can see something that looks like a double top here forming on the monthly time frame. Now, mind you, this is a significant time frame, and you see you guys saw what happened. Yeah, so this was the 2020-2021 chart pattern that formed here, and you can see how massive the entire drop was, and something similar is happening here. And mind you, the market only trades for about 40% of the time, and for the rest of the 60%, it is stuck in the range. So it is taking significantly long for this guy to form. You guys, since 2022 all the way through to 2023, we're stuck in this range, and now this is 2024, and we are almost midway through. This is about 5 months into 2024, and we are stuck in this range. Now, this is a chart pattern that is obviously a continuation chart pattern of this entire drop on the euro dollar. However, this will only be validated if we see a decent break below this blue bar here, which happens to be the neckline in this case. So scaling down to the weekly time frame, we have something that looks like head and shoulders pattern, which I have been talking about lately. So this is the bigger head and shoulders pattern here, and then this is a smaller one from it. However, we had the so I was actually highlighting this guy to the downside on one condition. All right, so let's go down to the daily time frame. So I'll show you what that condition was. So I was actually saying, okay, fine, since we have put in, sorry guys, so since we have put in a head and shoulders pattern, and so this is the smaller head and shoulders pattern in the bigger head and shoulders pattern. So since we've actually put that, and we've broken out of the neckline here, which happens to be this yellow bar right here, a decent pullback and a continuation. Technically speaking, that was what the market was supposed to do. However, the market kind of stored around here, just wasted so much time, took forever to just decide, and then next thing CPI came. Actually, I think the FOMC Fed chair Powell came in, spoke, sounded a bit dovish, and then obviously NFP came again, pushed this guy up, pushed the dollar lower, and then obviously the CPI came and then took things all the way up. So, however, I'm still on my hands on this pair at the moment, particularly because of what the dollar seems to do at the moment. We do have a supply level right here. Okay, and I can remember highlighting this level in a previous episode of Over Weekly. Like I said to you guys, that if the market drop all the way down, that something similar to this might happen. We could potentially rally into the supply levels, and this is where we stand at the moment. So ideally we are back in the range, and I'm not the type to trade range. So I think I'm going to leave Euro USD for like maybe another week or two. Let's see what's happening. However, if you're looking for some lower time frame trades, I mean, this is the demand level. You can see the breakout might not pull back, and then continuation. So ideally, we should see a second leg down before we actually continue all the way down. But mind you, you're trading against the trend. The overall trend is actually bearish at the moment. So I would like to wait and see what happens around this region. Do we actually break above here, or do we actually break or stay down here and then push all the way back down? Now, mind you, in my own opinion, if the euro dollar chooses to collapse all the way back down here, I'll still wait for a decent break below here, because I'm on the bearish side. So I like to see a decent break back down below here, and then I'll jump on the share over then take it all the way to this green bar right here, which will be potentially for about 120 pips thereabouts. All right, so that's that for the euro dollar. Now on the flip side, in the event that we do actually clear this supply level, that is, we actually break above this supply level here, we should see this guy come into this bar right here. And then obviously, if this doesn't hold, then I think we'll be in for a full-scale reversal. But from the monthly time frame, this is heavy, this is bearish. Weekly time frame bearish, daily time frame bearish. I don't see the reason as to why I would wait for buys on this pair at the moment. So for maybe another week, let's see what happens. Okay. So that's that for euro dollar. So the next pair on my list now will be GBPUSD. Now, guys, before I proceed, I have a platform to talk to you guys about. So there is a particular chatting platform called chatting platform called the Fastbull FX. So Fastbull FX practically is a chatting platform just like TradingView. However, what's so special about Fastbull FX is that you have access to all the fundamental events. You have access to order traders. You have access to even AI signals. You have access to the geopolitical events going on. You have access to fundamental events. All right. So like unlike TradingView, you have to leave the TradingView tab and then go search for Forex Factory or invest.com or whatever thing that you guys use for your fundamentals. However, for Fastbull FX, everything is incorporated into one screen. You have access to whatever thing you need here. Okay, you want the news is there, you want AI signals is there, you want every single thing you need, AI signals, analysis, economic calendar. This lets you know what the fundamental events are looking at looking at for the rest of the month of May or even June. This is a calendar. You have quotes. You have every single thing you need. All right. So this gives you access to the commodities market, to the stock market, to the indices, to crypto, to CME, to every single thing you need. And then they also host events, which obviously is free. It's free for you to attend. So instead of actually going to a different tab to start searching for the upcoming fundamentals, you can actually stay on their homepage and you get access to every single thing, guys. This is AI signals, right? So this is AI signal so far, and this signal was dropped, and currently it is at about 1,011.7 pips in profit. All right, you can see, and this is the AI signal. This is not a signal that was given by anyone. This is just AI. This is EA. Okay, and you can see profit everywhere. So for those of you guys that do not actually know how to trade, or even if you're new to trading, or if you're advanced, you could also use this platform. All right. So at Fastbull FX, we provide you cutting edge tool and real-time data to keep you ahead of the market. Even if you're just starting out or you're a seasoned trader, Fastbull platform is designed to meet your needs. All right. So it is simply enough for beginners. That is, if you're just coming into the market new, that if you're new to forex trading, it is simple enough for you. And then also, if you're a bit seasoned, it is actually powerful enough for the expert. All right. So the link to this platform, the link to this site is actually in the description of this video. So the first link takes you to the site, and the second link takes you to the App Store or Play Store to actually get the app. All right. So it works. It is fast, and it is a lot more decent. And then also you get access to a community of traders. You get access to different analysis from every single institution. All right. You have everybody. You have different analysts there. It works, and it's just very, very decent in my opinion. So I don't see the reason as to why you'll be chatting on one platform and then going to a different tab to go and search for fundamental events when you can just use the fast FX. It gives you access to every single thing you need. All right. So once again, the link is in the description of this video. Click on the first one to access the site, and the second one takes you to the App Store where you can download the mobile app. Okay, so back to the analysis here. So the second pair on analysis here is the pound sterling. So you guys, one of the reasons as to why I urge you guys to grab the course is because you guys listen, I have had this bar here. For some reason I just felt like the market could want to play games or just be funny. So I had this bar here. I said, okay, fine. I'm only interested in the pound sterling if you do break below this yellow bar. Once again, if it tells me, you can check my previous video. I wasn't even capping. All right. So I was like, okay, fine. Whatever the market wants to do, let it do. As long as he stays above this bar, I'm not selling this guy. I will only be interested in the pound sterling if I see a decent break below 1.24668. And guess what? The market tapped into the bar, came again the second time and left. All right. So imagine you were short this guy here, and then stop your stops were above here. Guys, he stopped you out twice. All right. So once again, grab the course. Do yourself a favor, guys. Grab the course. Now, while every other person, got confused, got discouraged, lost money in the market, myself and the rest of the standard procedure students, we're actually making money because we're actually focused on the Japanese index pair. So we went long on JPY, we were long on USDJPY, and we made a significant amount of money. All right. So now what's up for and also one of the advantages of being in my mentorship program is that you also get to see the trades I take and take the trades I take as well. So I tell you guys what trade I'm taking, why I'm taking it, and when I'm entering it. That is exactly, it's just exclusive access to my trades, and then also you get to learn as well because we have a live class. All right. So this right here for the pound sterling, it has a similar setup to that of the euro dollar. So I said here that we had a demand level, a supply level here rather. So this market was just playing around here, and luckily for me and luckily for the rest of the standard procedure members, I said to them, I said, listen, you have to wait for this bar to get broken. If this bar is not broken, we don't see any trade. So you guys must understand that I'm more of a reactive trader than a predictive trader. I like to wait for the market to act and then I jump on the trend. So now it is back in the range, all right. And one of the things about fake out is that if the market for some reason breaks out of the range and then for a different reason pulls all the way back into the range, it tends to move in the opposite direction exponentially. So now I'm keeping my cards open at the moment. I am not actually in a trade in this particular trade. All right. So one thing for sure is that we are back in this range, and as far as we are back in this range, I have no business trading the pound sterling at the moment. However, if you're the type who likes to trade, range trading or whatever trading, because now you can see that it has no particular direction at the moment. It's back in this range. So one thing I would advise you do is actually wait since the market is actually looking a bit medium term bullish. All right, so I would advise you wait for this yellow bar to get broken. Now, in the event that we actually fail to break above this yellow bar here, be rest assured I have other trading opportunities for you. And that is why I urge you guys to click the subscribe button so that whenever I come on here to drop this video, you're one of the first few to see us, so you can prepare for the weeks ahead. All right. So that's that for the pound sterling. Nothing much here. We're actually back in the range, and I see a demand level here, some minor demand level here, probably maybe a daily time frame and 4-hour time frame demand level. All right. So if this holds, all well and good. If it doesn't hold, guys, we're actually coming all the way up to 1.28940. Now, in the event that we do not come all the way to 1.28940 and they will start to reject here, once again, I'll be waiting to see us clear this 1.24732 region. If you do not do that, I'm not trading. All right, so that's that for the pound sterling. So let's move on to other exciting pairs. So we have pairs like the Aussie, the AUDUSD does not really have anything going on. It is back in the range. Majority of these pairs are back in the range due to the CPI numbers that came out. Yeah. So let's move on to what's going to make us money. Okay. So for AUD CHF. All right. So let's talk about the CHF pairs. So I have been highlighting this CHF pairs to the upside for quite some time, and I was waiting for a decent breakout of this range that we had here. Now let's go from the weekly time frame. This guy is overall bearish. However, we could take advantage of this chart pattern here, which seems to be a triple bottom on the weekly time frame. And now we are seeing a decent breakout. So this breakout now exposes this blue bar here. However, one thing I teach in the mentorship program is that we trade from one minor level to the next minor level. All right, so I will show you guys how you can go about trading this pair. So one thing is for sure, we are actually out of this downtrend here. Okay, this is out of the way. This trend line is out of the way, and now we have actually broken structure to the upside. Second time that we're actually doing that. So everything is pointing bullish at the moment for AUD CHF. We've put in a triple bottom here, and then we're out of this range. We blew up first, then came back, to retest this particular trend line here, and now we are actually breaking above, this other structure level here, exposing these highs. All right, so what I would advise you do is go down to the 4-hour time frame, or rather wait on the daily time frame, whichever one works for you. But this guy needs maybe another week to set up nicely. One thing is for sure that we are out of the downtrend, and we actually think that things are starting to point bullish at the moment. However, I'd like to see this guy rally for some more pips, then probably maybe one or two more legs up, and then a pullback here, a decent pullback here, and then rally all the way to the upside. So my prime target for AUD CHF is at 0.64224. All right, so a decent 400 pips here from this bar right here, a decent pullback here, and then we'll take it all the way to 0.64185. All right, so that's that for AUD CHF. The next pair up on my list is NZD CHF, a similar structure there. So the Swiss franc seems to be weak at the moment, so we could actually take advantage of that. So NZD CHF has a similar structure to that of AUD CHF. All right, so like I said, overall time frame, we are actually bearish. However, we came. I can remember trading this guy last year. I think last year or early this year. All right, and I was trying to highlight this guy to the downside. I think I can remember trying to sell somewhere around here, but every single time I tried to sell, the market popped up, took me out. You can see this week's actually again it took me out, and then when I went on hard time frame, which is something I preach in a standard procedure program. Whenever you're in a trade, and then for some reason it stops you out twice, or even at the first instance where it stops you out, zoom out. All right, just zoom out and see what's happening on the higher time frame. So when I did that, I kind of saw something that looked like inverted this pattern, where you have the head here, shoulder, and then this was a higher low from here. Then obviously this was signaling to the upside, and this is a weekly engulfing candle, and the week closes today, Friday, and this is about to close in a few hours. In about 2 hours, this candle will close. So this is a decent breakout confirmation here. So a pullback here would certainly expose the 0.6500 area. Now, mind you, the market is not going to go from here to here in one day. It's going to take a while, probably maybe 3, 4, 5 months. All right, we are in this range since 2023 August, so it's not going to go from here to here in 2 days. However, that is the beauty of it. All right, so it gives you guys more time to gather your capital, to get yourself mentally prepared, and watch my videos and learn and set yourself nice, because you're actually going to make a lot of money this year, 2024, trading with me. All you have to do is make sure that you're subscribed to my channel, and then you're also a standard procedure student. All right, so currently the course is going for $100. Okay, so now for NZD CHF, we have a decent breakout. This is a decent breakout. This is a bullish engulfing candle on the weekly time frame. All right, so another week candle here, and then a decent pullback down here, and a bounce. All right, a bounce, or if we happen to get a decent wave pattern that it flags, all well and good. However, whatever thing that the market wants to do, I need to see a decent pullback here before I actually hop on the trade. All right, so my let me just look left and be sure. All right, so the first level target for this guy is obviously the supply levels here. All right, because this was where the market reversed from, and that's about 0.59874. All right, then the overall level target for this guy is 0.646,500. Now, in the event that this level doesn't hold, we have some more, room to the upside, which I will come to talk to you guys if in case this particular level doesn't hold. All right, so I don't seem to see anything stopping this guy from rallying at the moment. We're actually out of every single obstacle here. So we have the first touch, second touch. We have the break of trend line and a retest, and then this is actually starting to look to the upside. All right, so you guys can capitalize on this because the Swiss franc is weak at the moment, and the Japanese index is also weak at the moment. So the next pair on my list now, the ones that could actually make us money immediately is okay, let's talk about the S&P 500 first before we actually advance to the next one. So for the S&P 500, this guy has been extremely bullish. This guy is always bullish anyway. I haven't seen any bearish cycle on the S&P 500 since inception. All right. So for the SPX here, I think I recall highlighting this supply levels here. I said one thing is for sure. If we do not continue down here, we could actually rally into this supply level here, and then potentially maybe drop from there or maybe break above there. However, whatever thing that the market chooses to do, I do not see myself buying this guy from here. And for now, as you can see, we have actually come into the supply levels, and so far so good. The market is not rejecting all of it. So scaling down to the daily time frame, whatever thing that this guy wants to do, I'm just going to react to it. All right. So I can see that this is a supply level, okay? So because this was when the market reversed from, all right? So now, one thing is for sure, if this guy is going to come here, it has to break above this yellow bar here. So I'm watching this guy closely. If he did, I do see a decent break above here. I'll scale out my 4-hour time frame and then wait for a decent pullback, and then take this guy all the way to this brown bar, which is at 5,700 basis points for the S&P 500. However, in the event that doesn't happen, once again, I'm not a counter trend trader. I don't advise, but if we must, obviously the pullback target was this blue bar right here, because if I bring my fibs just like so, you can see that it is somewhere around there, and then this particular point here is actually the demand level that bettered the finishing leg of this entire stretch. All right, so this is an impulsive move, and so far we've not had any decent correction whatsoever. So I'm banking on the pullback. However, in the event that the market chooses not to pull back and then just break above here, we're here again to jump on the trade. All right, you can see that when something similar happened, we created that demand here, rallied, then came back to test the demand, and then this is the demand here. All right, so and we rallied. So technically speaking, ideally we should actually see this guy drop all the way. However, if that doesn't happen, and we do see a break above this bar right here, we will still make money by buying this guy all the way to 5,700 basis points for S&P 500. The next pair on my list now is gold. So for the XAUUSD, this guy has been on a bullish run. It has been on a crazy bullish run, and I've been talking about this guy, highlighting it. So this, from the weekly time frame, we've had a decent breakout. For so many weeks, we've had a decent breakout. So this was the first breakout here, and then this from there, it created this demand level, and since then it hasn't come back to actually test it. So gold is a bit of a 50-50, and it has a similar structure to that of the S&P 500. So like I said, I was banking on this supply level, sending this guy all the way back down. However, that didn't happen. So that is not happening at the moment. So I'm saying, in the event that the market continues on this bullish run, it is actually ideal for you to look for a pullback. Okay, so once you see a decent breakout here, breakout close confirmation here, then a pullback here, you can actually start buying gold all the way to $2,675 an ounce. However, I'm not quite confident in gold, man. I'm not gonna lie, due to the geopolitical events going on. All right, the war in the Middle East, I'm not very confident, okay, on gold. All right, so for me, I would, like I said, this is the demand level here. Okay, if I bring my fibs like from swing low to swing high, you can see that this is the demand level here. This is the 0.6 region. So technically speaking, we should see a decent pullback from this guy. However, since that is not happening, once you see a clear break above this structure here and a decent pullback, I mean, it's always a good. But for me, I'm just saying that this is a bit skeptical. This is a bit of a 50-50. I would prefer to see gold pull back to these 2,155 dollars an ounce. You know what? I think I think I'm gonna wait for it. Okay, I think I'm gonna see gold out. This is a precious metal. So this is a luxury metal. You don't just go and trade it anyhow. So sometimes even when the technicals align, something could come up somewhere and then next you start seeing gold crash. All right. So I mean overall we are bullish. Okay. However, I would like to see one leg down, just one more leg down to this $2,156 an ounce, and then we'll see the finishing rally from 2,000 from $2,600 an ounce all the way to $2,640 an ounce. All right, so that's that for gold. However, if you're the kind of aggressive trader here, you can actually take the pullback into the structure. You can take the buy. However, I'm quite conservative, so I think I'll leave gold for now if I do not see a decent pullback all the way back down here. All right, so that's that for gold. So now moving on to the pairs that have made us money so far, and for the ones that will make us more money. Actually, let's talk about oil. So US oil on the other hand, we've had a rather slow price action on oil, and I told you guys that this was the demand level here. Okay, now from swing low to swing high, we tapped right into the 0.618 region, and this is ideally this is the touch of the trend line here. So in forex trading, technically speaking, the third touch always seems to be the trick. So ideally, I would, like I said, I'm waiting for this guy. So it's either we come back above here, above this yellow bar here, and then that will expose that 93.73 dollars a barrel. However, if you do break below here, this will expose obviously the $67.74 a barrel mark. All right, so that's just that for oil. Nothing much here. Once again, the two criteria are one thing, the $84 a barrel zone. If you do break that level, we should see oil rally all the way to 93.73. However, if that doesn't happen and then we see a clear break of this $77.57 a barrel region, we should see oil drop all the way to 67.74. Right? So this is crude oil. For the next pair on our list now would be the dollar index. All right. So for the dollar index, it's been a crazy run for the dollar index. With all sorts of fundamental events coming in, the red folder event, from everywhere. So for the XY, so this is how it is looking there. So overall, we actually still I'm actually still bullish on this guy overall. Okay, so we had the first touch, or the second touch, and we've had the third touch here. And I said to you guys that okay, in the event that the market fails to break above here, we should see this guy drop all the way down to this demand level, and that was exactly what he did. All right, so he gave us something of a double top here, broke below, then it pulled back, and then it just continued down. So now the market is sitting at a critical level. All right, so this is from swing low to swing high. Once again, you guys know me, I love Fibonacci. So from swing low to swing high, we have the market sitting on the 0.5 region, and so this is the make or break level. All right, so this is the make or break level. So for the dollar bears, you have to break this level, and then for the bulls, this level has to hold. Okay, this level has to hold. However, technically speaking, we are still looking very bullish. Okay, if I go from the weekly time frame, you see that we've been in a very bullish trend, and this kind of coincides with what's happening on euro dollar and the pound sterling. All right, so this was that double top that we saw 2020 and 2021, and then this is a stretch. This is the inverse head and shoulders pattern, which the inverse is happening on the euro, which is the head and shoulders pattern. All right, so this is sitting on a critical zone here. You should be rally all the way up, we need to see a bounce off of here. And then if this guy is actually due to collapse or crash, then we need to see this guy clear this trend line here and drop all the way down. So in the event that this happens, in the event that the dollar fails to hold this level and then breaks below this trend line here, it exposes this, obviously, this demand level, and then it exposes the 102 region, and then obviously the 100.925 region. All right, so that's that for DXY. However, I'm still bullish on this guy, only up until the time where if we do break below here, then all well and good. My bias will be flipped. However, if we do not break below here, and then for some reason we have a bounce or a break above here, we are actually all the way bullish again. So for the pairs that could get us rich, we have obviously USDJPY. I highlighted this pair here. Okay, now if you're just seeing this video, I would advise you go back and check my previous episodes. So I've been banking on a breakout here, and that happened, and then we created some form of demand here, and from there we rallied. We got the BOJ intervention, and that only lined up with the technicals, which was a break and a retest, and then this was a decent swing low to swing high here. So we have the high to the low, then a pullback here, and then this is looking, obviously the CPI numbers affected this and created a pullback, but overall we are still looking very bullish on this guy. So my prime target for the dollar yen is 178 region. All right, so we have the 178.800 region. Okay, so we still have roughly about 2,100 pips to go. Now, like I said, this is not going to happen in 2 days. All right, so this means that we have a lot of trades lined up. So if you actually miss the entry somewhere around here, all well and good. So what you need to do is wait for a break of structure, a decent break of structure here, and a pullback, and wait for a decent bounce off of this level, and then we should see decent continuation all the way up. So long term, I'm still very bullish on the dollar yen. I'm still very bullish on this guy, and then also the reason as to why I'm confidently bullish on the dollar yen is because the Japanese index seems very weak at the moment. It just keeps falling. It's been falling since 2023. You guys have seen my videos where I was calling the Japanese yen all the way from 140, all the way from 140. I think that was somewhere around January 2023. So this guy has been rallying all the way up. So the Japanese index has been falling. Okay, that's been falling for over a year now. I called this guy somewhere around here. Okay, somewhere around here. This was January. All right. So now the next pair on my list now would be CAD-JPY. So mind you, I have been long this pair, and I'm currently out of this trade now. I've made my money, and I didn't want to hold through the red folder event because I wasn't. I mean, I had made a lot of money because I had a very early entry. So I made a significant amount of money here, and I was mindful of this supply level here. However, the market is looking like it wants to continue going higher. So like I said, similar structure to that of the dollar yen. I like to see a break of structure above here, then a pullback, then a hop on this trade, and then obviously take it to 1, 2, 3 region. And then in the event that we break above the 1, 2, 3 region, we have the 138 region. Okay, so these are long-term trades. These are long-term trading ideas, and you must do yourself a great justice by making sure that you hit the subscribe button so that you don't miss out on these opportunities, because I'll be back here next weekend to make sure that you guys are updated on what's happening in the market. So for Euro, so Euro JPY to the upside, CAD JPY to the upside, NZD JPY to the upside, GBP JPY all the way to the upside. Okay, Euro JPY, it's very simple. Like I said, a break of structure. We've had this decent uptrend here. So for me, I want to see another break of structure. Okay, so a break of structure and a pullback here exposes this 186 region. Guys, these are trades that can set you up for the rest of the year. Okay, it doesn't matter what the dollar seems to be doing. It wants to go bullish, all well and fine. all well and good. If it wants to go bearish, all well and good. However, you have enough trades. You have thousands of pips across GBPUSD, across USDJPY, across GBPUSD, across EURUSD. And to carry it all, you have Desmond here who will be coming here every single weekend to give you guys updates and they give you guys trades to take. Okay, so for the EURUSD, we have 1,657 pips to the upside. Decent. You have AUD CHF, you have NZD CHF. All right, so you have trades, guys. So whenever the market wants to be funny, you have to remind it that there are other pairs. Do you understand? There are other pairs. You must come to this forex market with an abundance mindset and never be glued to any single pair. So the next one on my list now is NZDJPY. So NZDJPY has been mind blowing, guys. This guy has literally been on a stretch. You can see the descent run, okay? And going from the weekly time frame, we seem to have put an inverted entry this pattern. Actually, let me just go to the monthly time frame. So we've been in this range for years, all right? We've been in this range for years, guys. This is since 2005. 2005, we've been here in here, and this is 2024. So this is decades of breakout. So now one of the range, so the range principle states that the total amount of people accumulated in a range that once you break out, you must give us the equal amount of pips. So this is from here to here is about 30,547 pips. And if I bring that out, you can see that it is roughly the same thing here. So I'll adjust this to this point. Okay, so we have trades. This is inverted. So you have the head, shoulder. This is a neckline getting broken out. So once give this guy another week, decent breakout, a pullback, and then this will be one of the most decent trades that you take for the rest of the year, guys. The trick is pick a pair that is about to trend for 500 to 1,000 pips, even 300 pips, and just be on that pair, milk that pair. Be on that pair, love that pair, trade that pair, and you're gonna make a lot of money from it. All right, so scaling down from the monthly to the weekly time frame here, we are seeing some form of breakout here. So this was the build up to the breakout, and it happened at the moment. So scaling down to the daily time frame now, so you can see that we had 2-3 days breakout. All right, so 2-3 days breakout. However, this is where the market should potentially rally into. Okay, so the market should actually allow this guy come into this 98 region, either this 98 region or actually 98 region or this particular region here. All right, but just allow the market go for a few more pips. All right, so I'm banking on the 98 region. So once we get here, we should see a decent pullback, and then we now hit this guy and take it all the way, guys. We have thousands of pips to go. All right, so like I said, if you're not subscribed to this channel, you're gonna miss out. So make sure that you hit the subscribe button, because I'll be here every single weekend, guys. I'm taking it straight. Okay, I'm taking AUD CHF, NZD CHF, AUDJPY, NZDJPY, GBPJPY, CHF, EURUSD. All these pairs are about to give you money. All right, so make sure that you actually are subscribed to my channel, and then get active. So for GBPJPY, it has a similar structure to EURUSD. And a break of structure, all these pairs, we just need to see a break of structure, and we are good to go. So AUDJPY has a similar structure to NZDJPY. All right, so like I said, structure is king here. You can see how the market has been around with structure, and this is something that I teach in the standard procedure program, and I've been urging you guys to grab the course. You have to grab the course so that you can get yourself ready. You can imagine the market is about to give you thousands of pips, and you don't even know how to even catch them. All right, so make sure that you grab the course. The link is in the description. You can shoot me an email, and then you can come directly to my Telegram community and then speak to me. It is live classes one-on-one at the moment. However, once my course goes live, you'll have to learn by yourself. All right, so this is AUDJPY from the monthly time frame. It is looking like a range breakout here. All right, so we've been in this range for a very long time, and we had like a decent inverted this pattern break and retest. So this is like So this is a low, this is a high, high, low, higher, high, higher, low, higher, high. So somewhere around here, we should actually come in for a higher low and then actually hit this guy all the way up. All right, so we have levels to go. We have thousands of pips. We have thousands of pips on this guy. We have about 2,700, approximately 2,800 pips to go. So we have a decent ground to cover. All right, for the rest of the year, guys, we have trades. All you need to do is get active, subscribe to Desmond's channel, and then make sure that you come to my Telegram community and come and learn from the rest of the traders, and then primarily, pay for the mentorship. All right. So thank you so much for sticking to the end of this video. Once again, my name is Desmond Samuel, and if you're not subscribed, make sure you hit the subscribe button and then turn on post notification and let me know what you think about this video in the comment section. Thank you so much, guys. I'll see you guys next week. Peace.